Bang! Welcome back, folks. Pete Najarian and I welcome you to the Rebel's Edge. Pete, another exciting week kicking off, and we're just 2 weeks out from the Labor Day holiday, Pete. So
Yeah.
August
we're
is flying by. That.
You know why it's flying by? You've been on a boat for the last 10 days, floating around somewhere in the middle of Europe.
That's right, Croatia. If you've never been, folks, you got to go. It's fabulous. It's one of the easiest places to float, too, because the water has such a high saline content, Pete, that you just lay there. Our father would have just laid there with his feet up all day like this, Pete, because that guy could float anywhere.
Floating like he was in the Dead Sea.
Well, folks, this is the Rebel's Edge. We talk about stocks that are moving. We'll talk about unusual activity. We'll hit some sports. Let's talk about the market turnaround today, Pete, because the Empire manufacturing number was weak, very, very weak. But tell me, Pete, why that is good news for the market.
Well, John, it's amazing how fast we flipped, right? I mean, just to give people a little bit of summation. So we were down about 200 points early on, down about 150. And then suddenly you get this number and it's an awful, I mean, like, I think you said it was historically one of the worst numbers I've seen. I mean, this was pretty awful, but maybe the Fed doesn't have to do all of the work that they thought they had to do. And I think that's part of the interpretation for sure, John. The other thing is, it was interesting to see some of the different areas of the market that turned. I mean, one of the things I do on the take is I talk about where are we right now for energy? Where are we for technology? Where are we for financials and materials? They have all flipped and they all moved together. And you know, it's a combination of all of that, but energy was down 4%. Now it's down about 2%. I think that type of thing just kind of flips around the markets in a good way for us today.
Yeah, it certainly did, Pete, because like you say, we had a big loss in the markets. As soon as that number hit, we started diving. We went from 0.6% down in the S&P to over 1.25%, 1.5%, and now flipped all the way back the other way. And the reason is, folks, because the 10-year note is down to 2.78, which tells you that people are betting that the Fed, like Pete said, isn't going to have to be nearly as aggressive as they would have had to be otherwise. Pete, the crude reality is that you talked about earlier that crude oil on the take and so forth, crude oil's down hard. And it's down hard because if the Empire manufacturing numbers bad, if China numbers are bad, then, we're worried about recession, clearly, but we're also worried that there won't be the demand for crude oil. And that's why we're seeing that down so much today.
Right. And John, all people have to do is take a look at what started off the month of August. We were $98 for crude oil. We dropped to $88 before you could blink in a couple of days. Then we recovered. We got back to 94. Here we are again, somewhere close to 88. And it's the volatility of what we're seeing there. And I think that's got people a little bit nervous, a little bit spooked. But I will tell you this. Take a look at the last month of Chevron and Devon. I'm giving you Chevron as the big boy. I'm giving you Devon as one of those big beta names. And they have absolutely been rocket ships, John. That just shows you that they just need oil to kind of hover around. If it's up there near 100 or somewhere close to that level, if it starts to sell much further off than it is right now, I think we'll see those start to adjust. But right now, John, 33% in the last month for Chevron to the upside. Devon about 48% year to date, rather. That's pretty impressive. Those are big, big moves in the energy space.
Yeah, and Pete, the ones that get it out of the ground, just real quick, Schlumberger, Halliburton, DO, which is Diamond Offshore, Neighbors, NBR. These are the ones, folks, you want to watch for eventually some bounce. But right now, no bounce. They're down between 5 and 9% right now, and they're down because nobody's going to spend massive amounts of money to get more energy out like they would if it was 120, right, Pete?
Yeah, absolutely. Moving on to Apple, John. How about this? This storyline is pretty amazing. You and I were talking about it, even though we knew we were going to talk about it here. We were talking about it before as well. I mean, The fact that their ad business is $4 billion already and they're expecting it to double. John, what's your take right now on Apple and what their plans are for the future?
Right. Well, we all know that Apple has over a billion handsets alone, Pete,
Yeah.
out there in the world. And a billion handsets has already resulted in about $4 billion a year, Pete, like you said, in revenue for ads. That's huge. Most people don't think of Apple as an ad platform. They don't really think about Amazon as much either, Pete, but both of them huge on the ad side, not just on the products that they sell. So what I would concentrate on, Pete, is that there's so many more areas. And that's what Bloomberg was talking about today. They were saying, you start putting this on the maps that Apple has, you start putting it on Safari and all the rest, and you can see that this is just an expanding pie that competes with Facebook and Google for those ad dollars. So it's not just those two, it's Amazon and Apple that are drawing big on these ad dollars because we're all on our phones all the time. We all know it. Doesn't matter if it's an Apple or if it's a one of the Google phones or any of the Android products. People are on their phones a lot, and that's great for the ad business that those guys provide, Pete. And that's why I think you want to watch them. Poshmark, though, Pete, I wanted to hit this one quick because this is, I think, a trade down play. If you've never been on the site, folks, Poshmark is like a secondhand store. They do sell new stuff, no doubt, but they sell a lot of stuff that somebody that needed to trade down, especially during a recession, Pete, when you'd like to go into, that high-end retailer, but, you really want that fashion, and you're going to try to buy it at a lesser price. That's why you go to Poshmark.
They got 80 million viewers, John. That's pretty impressive. And on top of that, part of what we're seeing today, why it's up 15% on this little upgrade from Barclays, is probably because they've got a pretty daggone high short interest, John. When you look at it, whether you want to look at the float or the outstanding, it's relatively high. And I don't want to say this is another meme stock, but this is another meme stock. It's interesting to see how these things, they get squeezed, right? And this is, I feel like we're getting a bit of a squeeze because like a lot of the other meme stocks, it's a stock that actually, they don't make money. These guys, when are they going to have some earnings? I don't know when that's going to happen. We've seen it with Peloton. We've seen it with Uber. We've seen it to a lot of these different names. But it's a great company. And I agree with you. The trade down does make a lot of sense. And I think that's partially what's fueling this thing to the upside. I also think there is a big squeeze going on right now. And that's probably got the shorts a little bit nervous as we speak.
Pete, I think you're right. And I think that Poshmark has the possibility of making money because, again, they don't even have to handle the stuff, Pete. I mean, they are very similar in many ways to eBay, except just for luxury goods, or at least people's perception of luxury goods. So what are you paying for that? You're not paying to stock it, that's for sure, because people are providing that, and they're the ones running the stores. All right, Pete, unusual activity. Let me throw one out to you. We had AES about 10 days ago, and that one played out really well. These are utilities, Pete, and they usually pay a high dividend, and that's why in a lower interest rate environment, they get a lot more flow. So I would say PCG. That's the one that I'm focused on today, Pete. Somebody stepped in and bought a ton of upside calls. If you don't trade options, don't worry. That means it's bullish. People that are in there buying calls are betting on the upside for a particular stock. So in the case of PCG, I like that they're buying all these upside calls, Pete. They're about 10% higher than where the stock is right now. I like that play.
And I'm looking, John, in a totally different area, but it's pretty daggone interesting with TLRY because we're talking about cannabis. Yeah. I like the little cannabis.
If you got them.
John, in the first 2.5 hours, they traded 25 million shares. What does that mean? Well, that's normally what would happen in an entire day. So it gives you an idea of just how busy they are right now in TLRY. The stock was trading about 420, had a monstrous buyer come in, fairly inexpensive options, but nonetheless, 21,000 calls were bought here for the August 4.5s. That means the stock's going to have to make a big move in a short period of time. But TLRY certainly could be one of those names, because that's another one that might be categorized as a meme stock. It's got a little bit of short. You can get a bit of a squeeze there. That, I think, really just adds to what's going on with what we're seeing there in the cannabis space. As a matter of fact, the CEO was talking about it's $100 billion opportunity in his mind for the cannabis space. So there's a lot of folks on the health side of it. There's other folks on the enjoyment side of it. But I can tell you this, I think you're going to be enjoying these calls, because I think there's a possibility for this thing to really take off. We'll see. That's a big buyer right now for that name.
Yeah, and anytime you have a big buyer of calls, folks, again,
Yep.
if you don't trade options, that's a bullish sign.
Yep.
If they were big buyers of puts, that's a bearish sign. Both stocks we talked about today were bullish. They were buying upside calls, betting that those stocks go higher in the short term. Well, Pete, again, I know you do that big show, the Sports Huddle, every weekend on Sundays from 10 until noon. What are some of the big sports headlines that you're really focused on right now?
Well, there's so many, John, it's actually hard to pick. But I mean, there's a lot of injuries going on. And obviously, you never want to lose a quarterback, especially one that people definitely know is going to be their starter. That's what happened to the Jets. But I was focused really on Lamar Jackson. I think this guy is remarkable. I mean, he's in his 5th year, John. He's on the same contract. He's making $23 million. I know that sounds like a lot of money, but if I told you there are, I believe it's 8 or 9 quarterbacks in the NFL that are making 40 million plus. Mahomes is making that number 46 million. I think Aaron Rodgers is a little bit over 50 million. And Lamar Jackson is his own negotiator. He is the agent. He represents himself. I find this guy to be absolutely fascinating. We saw what happened with Dak Prescott. He did get hurt. He still got the big contract. This is something that Lamar communicated, which was, if I don't get the contract signed by the time the season starts, we're going to take it off the table and we'll figure it out later. He's a great teammate, John, an MVP. The guy's been to a Super Bowl. I mean, what else do they want? And it's going to cost the Ravens the longer they wait.
Yep, I agree. And this is a situation where when you've got a franchise player, which he clearly is, Pete, a franchise player, when you've got a Mahomes or you've got a Jackson, you just got to sign them. And it doesn't matter if it's 300 or 400 mil, because they put people in the seats and they can take you to the next level. As you say, he's already been to that level. Now it's a question of him getting back there. And if he's got the right defense and the people to throw the ball to, he will get there, I think, Pete. This is a team to watch in the AFC, and he'd be playing for that huge contract right now.
Well, we got another one, John. He's also in the AFC. He's in the same conference. And Kenny Pickett. Now, this kid's a great young man, John. He was a quarterback at the University of Pittsburgh. He was the only quarterback this year in the first round of the draft, actually, which is unheard of, quite honestly. But he was the guy that was selected. But he didn't get picked till pick 20, which is pretty low. I know it sounds like, well, he's in that upper echelon. No, when you're at 20 and you're expected to go somewhere maybe in the top 6 or 8, that's a big slide down. But John, the reason he slid down was so ridiculous. The NFL gets so caught up in their analytics and everything that goes on at the combine. You and I could have watched this kid last year and said, you know what? This guy's a baller. He's throwing touchdowns. He's not throwing interceptions. He's throwing for thousands of yards throughout his career. He's had an unbelievable career. He goes to the Steelers. He looked great the other day in his first game and preseason game. Nonetheless, he looked great. And the reason he slid, John, his hands weren't big enough. Well, I can tell you this. I don't care how big the guy's hands are. He can manage that football as good as any quarterback in the NFL right now. And he's another addition to all these young guns that are in the NFL. I think it's pretty exciting, but isn't the combine getting to the point of ridiculous, John, with this kind of crap?
Yeah, it is. I mean, every once in a while, Pete, you get somebody like a Cooper Kupp or like this guy Pickett, who, comes out of, in Cooper Kupp's case, comes out of nowhere, Eastern Washington or whatever. But in the case of this guy Pickett, he came right out of Pittsburgh, right there. He fell into their lap. They'd be idiots not to take him. And I think with Ben retiring, Pete, this is a kid who could see a lot of playing time. And if the line can stay healthy in front of him, I bet he has a great freshman year in the NFL.
Yep. I think he's going to be dropping dimes. He's a fun kid to watch. He's a great, oh, by the way, his gal's kind of attractive too, John. I'll tell you, that was all over Twitter. I'm sitting there and I'm looking at this thing and I'm like, holy smokes, look at these guys. It's unbelievable. But, that's quarterbacks. You and I were linebackers. We just kind of waltz around and try to figure it all out.
I remember when linebacker used to be one of the premier positions, Pete, in football.
Yeah.
Now it's kind of an afterthought, but the guys are fast. They run like deer.
Yeah.
Hey, folks, we appreciate you joining us. Pete Najarian, of course, at Pete Najarian. I'm John Najarian. We appreciate you joining us. Thank you for all the nice comments on Twitter and so forth. We will be back tomorrow with another Rebels Edge. And make sure you remember that Pete's got the take at 10:30 a.m. every business day. We've got the Rebel Edge Monday, Tuesday, and Thursday. And then I've got 3 at 3 every business day, 3 p.m. Eastern time. We'll see you tomorrow.